What will the US economy look like in 2026? It's a huge question, and one we're going to tackle today. Forget the confusing charts and boring jargon. Let's break down what could be in store for our wallets, our jobs, and the country's financial future. So, where do we even begin? Let's start with the big picture. Economic growth. Most economists are looking at a period of moderation. After the roller coaster ride of the early 2020s, with its pandemic stimulus, supply chain chaos, and rapid inflation, 2026 is expected to feel more normal. Think of it like a car that's been speeding and is now settling into a steady, sustainable cruising speed. We're not talking about a booming, roaring economy, but we're also not talking about a screeching halt. The general consensus points towards a modest but positive GDP growth rate, likely somewhere in the neighborhood of 2%. This is considered a healthy pace for a mature economy like the United States. It's enough to create jobs and opportunities without overheating and causing another spike in inflation. Speaking of inflation, that's the word that's been on everyone's mind. The Federal Reserve has been on a mission, raising interest rates to cool down those soaring prices. By 2026, we should see the long-term effects of this strategy. The goal is to have inflation settle back down to the Fed's target of around 2%. Now, this doesn't mean prices will go back to what they were in 2019. Unfortunately, that ship has sailed. What it does mean is that the rate of price increases will slow down significantly. Your grocery bill won't be jumping up dramatically every month. This stability is crucial. It allows businesses to plan for the future with more certainty and helps households manage their budgets without constant stress. Will we get there? It's a delicate balancing act. If the Fed keeps rates too high for too long, it could tip the economy into a recession. If they cut them too soon, inflation could flare up again. For now, the path looks promising for a return to price stability by 2026. Now, let's talk about something that hits close to home for everyone. The job market. The labor market has been incredibly resilient, with unemployment rates staying historically low. This has been great for workers, giving them more bargaining power for higher wages and better benefits. Looking ahead to 2026, we can expect the job market to cool off a bit from its red-hot state, but it should remain strong. Unemployment might tick up slightly from its current lows, but it's projected to stay well within a healthy range, likely below 4.5%. But the real story in the 2026 job market is about the asterisk types. Asterisk of jobs. 3 huge trends are reshaping the workforce: artificial intelligence, the green energy transition, and the reshoring of manufacturing. First, AI. It's everywhere, and its impact is only going to grow. By 2026, AI won't just be a tool for tech companies. It'll be integrated into healthcare, finance, logistics, and even creative fields. This will create a massive demand for people with AI-related skills, data scientists, machine learning engineers, and AI ethics specialists. At the same time, it will automate many routine tasks. This is the classic double-edged sword of technology. Some jobs will be displaced, but many new ones, some we can't even imagine yet, will be created. The key for the workforce will be adaptability and a commitment to lifelong learning. Second, the green transition. The global push to combat climate change is fueling a revolution in energy. In 2026, we'll be seeing major investments in renewable energy sources like solar and wind, as well as in electric vehicle manufacturing and battery technology. This isn't just an environmental movement, it's a massive economic one. It's creating a whole new sector of jobs, from technicians installing solar panels and maintaining wind turbines, to engineers designing more efficient batteries and scientists researching next-generation clean energy. These green-collar jobs will be a significant driver of employment growth across the country. And third, research. For decades, the trend was to move manufacturing overseas. Now, partly due to the supply chain disruptions we saw during the pandemic and geopolitical tensions, there's a big push to bring manufacturing back to the US. We're seeing new factories, especially for things like semiconductors and electric vehicle components, being built on American soil. This is a huge deal. It means more high-skilled manufacturing jobs and a more resilient domestic supply chain. By 2026, the Made in the USA label will be more than just a slogan. It will be a reflection of a real economic shift. So, a strong but moderating job market with big shifts in the types of skills that are in demand. What does this all mean for your paycheck? Wage growth is expected to slow down from the rapid pace of the early 2020s. But here's the good news. With inflation also coming down, your real wages, that's your pay after accounting for inflation, should actually be growing. In other words, your purchasing power should be increasing. You'll feel like your money is going further than it has in a while, which is a welcome relief for everyone. Now, let's shift gears and look at the housing market. What a wild ride it's been. Skyrocketing prices, bidding wars, and then a sharp slowdown as interest rates climbed. So, what's the forecast for 2026? Don't expect a major crash, but also do not expect a return to the frenzy of 2021. The market is likely to be much more balanced. The key factor here is mortgage rates. As the Fed's policies continue to take hold and inflation stabilizes, mortgage rates are expected to gradually decline from their recent peaks. They probably won't fall back to the ultra-low levels of 2020, but a drop into the 5% range could be realistic by 2026. This would make homeownership more affordable for many people who have been priced out of the market. However, the fundamental problem of a housing shortage will still exist. We simply haven't been building enough new homes to keep up with demand for years. This persistent lack of supply will put a floor under prices, preventing a major downturn. So, in 2026, expect a housing market with more stable prices, maybe some modest appreciation, and more manageable mortgage rates. It will be a healthier market for both buyers and sellers, with less panic and more room for negotiation. Of course, we can't talk about the US economy without mentioning some of the risks and wildcards. Nothing is ever guaranteed. Geopolitical instability is always a major risk. A conflict in a key region could disrupt energy supplies or global trade, sending shockwaves through the economy. The national debt is another long-term concern. While it might not cause an immediate crisis, the rising costs of servicing that debt could eventually crowd out other government spending on things like infrastructure, education, and research. And then there's the political climate. 2026 is a midterm election year, and the political landscape can have a real impact on economic policy and business confidence. Uncertainty is never good for the economy, so the political environment will be something to watch closely. So, to wrap it all up, what's the big takeaway for the US economy in 2026? The word that comes to mind is normalization. We were looking at a transition, away from the extremes, and back to a more stable and sustainable path. We can expect moderate economic growth, inflation returning to a manageable level, and a solid job market that's undergoing significant transformation due to AI, green energy, and Your real wages should be growing, and the housing market should be calmer and more accessible. There are definitely challenges and risks on the horizon, but the underlying fundamentals of the US economy look sound. The key for all of us, whether as workers, consumers, or investors, will be to stay informed and adaptable. The world is changing fast, and the opportunities of 2026 will belong to those who are ready to embrace them. Thanks so much for watching. What are your predictions for 2026? Let me know down in the comments. And if you found this breakdown helpful, don't forget to like this video and subscribe for more insights into the economy and your finances. See you in the next one.